Good evening, everyone. I am Hiren Gilani, whole-time director. First, quickly, let me give you an overview of Fresh Ltd. Basically, Fresh Ltd established in 2007, headquartered in Ahmedabad, is listed on BSE SME platform since March 2017. Company is primarily into two business segments. One is a service business, the other business is a fruit vegetable supply chain business. I'll start with the overview of the service business. The service business basically is about various activities spanning from loading, unloading, sorting, grading, packing, premium packing, cold storage management, ripening chambers management, overall warehouse operations, manpower supply. Primarily, the services are for the fruit vegetable clients, those who are into agriculture, FMCG, and related businesses. The key client for our current business is Reliance Fresh, Wagh Bakri Tea, Vasant Masala, Intas Pharmaceuticals, and few others. The service business is around 15% of our sales in FY 23, and going forward, the thrust of the management is more into the fruit vegetable supply chain business. As far as fruit vegetable supply chain business is concerned, primarily the business is about procurement, processing and placement of fruits and vegetables. We procure fruits and vegetables from various about 85 districts of Maharashtra, Rajasthan, Gujarat, UP and Karnataka. This we procure from farmers, local area aggregators, suppliers, and our own collection centers. We also do limited investments and selective participation in joint venture farming, contract farming. So primarily, the procurement of fruits and vegetables happens through these five areas. As far as processing is concerned, post procurement, that is a sorting, grading, packing, logistics arrangement. These activities are again, different for different segment of buyers. With regard to placements, basically the sales, the distribution channels, we have modern trade and e-commerce as a category. We have APMCs as a category. We have food processors, exporters, exports. Partly we do B2C in Mumbai and Ahmedabad. And we are also building slowly the HoReCa vertical. And we have been doing R&D and business development activities with respect to franchisee business. Fresh Ltd basically, as we speak today, works across about 17 to 18 states in India with regard to its sales. We work with around 85 APMCs across the country. We have built a farmer base of more than 1,20,000. Our full-time employed team members are around 850 plus. Our primary operations comes from Gujarat, Maharashtra and Rajasthan. We have about 14 collection centers. Out of that, 7 are seasonal, 7 are full-time. We also have our own 6 distribution centers for selling of fruits and vegetables in Ahmedabad, Pune, Mumbai, Hyderabad and Delhi. Over the last 2.5 years, we have extensively expanded our operations with regard to procurement and sales and distribution. We also have about 15 to 18 full-time distribution partners. We have a sales channel of about 12 people. Our core product portfolio consists of 9 products. Last year, our sales was about, in terms of tonnage, our sales was around 22,000 tons. This year, in FY 24, we are targeting about 32,000 tons of business. In terms of our capabilities and capacity at the back end, company has about 1,50,000 tons of procurement capacity of fruits and vegetables. Looking at our current distribution channels and our distribution centers, our selling capacity is around 75,000 tons. So currently, company is working on a preferential issue of equity sales. The BSE approval is already received after the approval of shareholders and the board. Company is in the process of completing the preferential issue in the current month. With this preferential issue, company's net worth will move from around 32 crore to about 62 crore. This will help us to kind of focus on our expansion initiatives in various areas. I would like to now come to the results of H1 FY24. Since we are listed on SME, we come out with half-yearly results. The sales for H1 FY24 is at 62.84 crore versus last year 43.39 CR, which is a jump of about 44.81%. Our EBITDA for the period was at 4.16 CR versus last year's 3.42, which is a jump of about 21.69%. Our PAT margin was around 4.52% and versus last year's 5.49%. Our PAT was at 2.84 CR versus last year's 2.39 crores. This growth in sales has primarily come from corporate sales, increase in service business with Reliance, our growth in sales with modern trade and e-commerce. We have also benefited from a huge expansion in the last 18 months we have done across Delhi, Hyderabad, Pune and Ahmedabad. Going forward, our large part of the growth will definitely keep coming from modern trade and e-commerce. However, we have also been penetrating North, Northeast and Southern markets. We have identified about 20 core APMCs where we can continue to grow our business. We have also built a separate sales team for different cities and different segments, which will also ensure that we start building our HoReCa, franchisee, B2C and exports verticals. With regard to this growth, primarily it has come from mango, onion, pomegranate and apple. Our core product portfolio consists of, as I mentioned, 9 products. Out of that, the main is pomegranate, second is onion, third is orange, fourth is apple. Then there are a couple of imported fruits. Then we also have grapes. We have some of the vegetables and tomatoes. Our growth going forward will also be driven by a couple of new initiatives which we are focusing on North and Northeast, as I mentioned. With this, I would like to kind of complete the preliminary introduction of the company, and I would like to give it to moderator for question and answer sessions. Thank you very much.
Thank you. We will now begin the question and answer session. The first question is from the line of Bhakti Oja from Capital Square Financial Services Private Limited. Please go ahead.
Good evening, sir. My question is, recent update to exchange about business expansion in Uttarakhand. Can you throw some light on it? How it will help Prime Fresh?
Sure. Thank you. I would like to just touch upon the broad aspect of it, and later on I will hand over to our CMD. Preliminary, if you look at the way the Prime Fresh operates, it has built a massive agri supply chain ecosystem across Maharashtra, Gujarat, Rajasthan, and a couple of cities like Pune and Hyderabad and Delhi. What we are doing is that we are building a large, stakeholders like farmers, local area aggregators, suppliers, service providers, transporters, sorting, grading, packing teams, and of course the sales and the procurement field team. What we are going to do is that we are going to replicate the entire learning and the entire ecosystem what we have built over the last 16 years in these 3 states, and replicate the same in Uttarakhand. This will help us to de-risk our procurement capacity. It will also help expand our sales in Uttarakhand. It will also help us to get into food processing and organic fruits and vegetable segments. In terms of the target markets, target products and target clients, etc., I would request our CMD to provide a little brief detail on this expansion initiative.
Yeah, sure. Basically, as far as Uttarakhand investment is concerned, we are focusing in basically 3-4 categories. One is farming. Second is rural ecosystems development through farmers development. Would like to basically setting up few collection centers, distribution centers for agriculture produce. Also, if any JVs possible with food processing units or food processors, then we would like to get into those things also. FPO based farmer groups, food distribution activities, and organic farming, basically all related to exports and upcoming market for the in agriculture product. So the core focus will be for Uttarakhand. Will have we are looking at like 5 years plan, and we are thinking to have better setup and infrastructure over the Uttarakhand state. So this will help us basically to better the north market. Our basically presence will be more stronger, and it will help us for future growth.
Thank you.
Okay, sir.
Thank you. We have the next question from the line of Ravindra Jain from NJ Securities. Please go ahead.
Hello. Yeah, hi, sir. My question is with regards to the PAT. Like the PAT margins have been restricted to about 5%, 5.5%. So I would like to know, is there any scope to increase the margin, and how are we looking to go about with that?
Sure. Thank you. So first of all, we need to dwell into a detail of why these margins have been hovering around 5%. If you look at our detailed annual reports, if you look at our P&L statements, what we have been giving to exchanges, we have been heavily investing over the last 3 years in setting up collection centers, distribution centers. We have been expanding our sales team. We have been increasing our traveling spend, packing metal inventories. We have been spending a lot of money on trial errors and storage and R&D, and also a lot of initiatives like exports, franchise business, B2C business. These all initiatives and activities we have been investing from our GP what we earn, right? So company has been continuously investing across the board, and hence the margins have remained in this current time. Now, looking at the growth plan which company is pursuing right now, we will continue to invest in these initiatives at least for another 3 to 6 months. So I believe that somewhere middle of June or middle of July, our cost structure should pick out in terms of where we have been investing, and we have been getting the benefit of these initiatives and traveling and the people which we have added over the last 2 years. So at some point of time, if you look at the capacity what we have built, we will get better utilized, and your staff cost and your capital cost, particularly the interest cost and the traveling cost, will start kind of moderating or will not rise as much as your sales is rising. This should ensure that slowly we should get into a much better margin from the cost structure point of view. However, if we were to kind of get a good traction in our HoReCa or exports or B2C or franchisee model, which we think we should get somewhere in the second half of FY25, then that could also additionally provide a good push to our gross margins, and hence our net margins should start going up. One very important point is that with the completion of this preferential issue, we would hardly be using our CC limits which we have been using over the last 2-3 quarters to grow our business. So technically, our interest cost will become zero in FY25. So you will have definitely an improvement in margin on account of all these 4 points.
Sure, sir. Thank you.
Thank you. The next question is from the line of Priyadarshi Srivastava, an individual investor. Please go ahead.
Good evening, sir. Thank you for the opportunity. Sir, you just spoke about the investment in Uttarakhand as well as on your BSc filing. I just wanted to know, sir, what kind of capital investment you are looking at in next 2 to 3 years, and when we see some revenue generation happening from this investment, sir?
Sure. So we are almost at a last stage of closing the whole business plan. In terms of our chairman is attending the global summit there in the next week, and we will be getting a more detailed clarity as with respect to certain requests which we have put across to them. If we were to kind of start implementing the preliminary plans which we have in our mind, probably maybe mid-February or mid-March onwards, I think initially in the first 1 year, the capex would be in the range of about 1 crore rupees. And largely, we would be using our working capital for enhancing our procurement bandwidth. And that procurement bandwidth would be utilized to increase our sales, as our chairman mentioned, in the north part of the country, in the northeast. So, initially, in the first year, the capex would be very little. However, in the year 2, depending on the land availability and certain licenses, etc., we could be very keen to increase our footprint into the food processing segment, and maybe we could be tying up with some of the food processing parks, and that is the time we may kind of increase our capex. Overall, if you look at the 5-year plan and what we are intending to invest 35 to 40 crore, I think on a higher side, in 5 years, the capex could be about 15 crore. The rest, on a 25, could be working capital.
Okay. Thank you. So as you just mentioned about getting in the food processing also, so this in Uttarakhand will be through some joint ventures, or you will do it wholly on yourself? Right.
So there is a organic growth also possible, depending on the, as I mentioned, land availability. And secondly, there are a couple of units which are available for a joint venture and partnership model, where we would feed these units with a raw material. We would help them with certain process and branding of Prime Fresh, and we would be kind of getting the job work done. We would be investing more in sourcing and selling and distribution, and ramping up the existing infrastructure which they have. So we would be kind of incurring more of an operational, capex or packing related or certain operational day-to-day expenses, and not invest too much into plant and machinery and all that.
Do you have any similar plans to do it on a greenfield basis in other parts of the country? Because we are seeing some good initiative and investment from the government of India in the food processing industry.
Sure. So what internally over the last 2 years we have been deliberating a lot within the management whether we should get into this, and because our team has a solid knowledge of the raw material, we have been supplying to food processing units across Maharashtra, Gujarat, Rajasthan. Whenever we did certain back of the envelope calculations, we realized that the margin and the ROE may not be very great initially in the first 3 years. Secondly, we realized that the scale which we were aspiring in F&B, the fresh business, is still not achieved. Okay, so the internal, if you look at the capacity utilization of our collection centers, distribution centers, and the field team, we should first aspire to cross at least 200-250 crore type of F&B fresh sales in the next 18 to 25 months. And then probably it could be a right time that, okay, we have a huge internal accruals coming from fresh business, and then probably using those cash flows to build those, food processing vertical. So somehow internally we have been kind of delaying this initiative based on purely, still having substantial opportunity in fresh business. And of course, we have been adding new channels. So let's say to sell the fresh, fruits and vegetables, we need to build a HoReCa, we need to build supply chain with food processors, franchisee models. And I think that would be the right time where you have some senior people heading the F&B business. You have a head of F&B business, head of sales and all that, where your management has a plenty of time for the expansion and the new initiatives. And we have identified areas, we have identified land, products, We have been doing research, but we have been not doing any action actually on that side.
Okay. That was nice of you, sir, to give us the details. Thank you very much, sir, and all the best, sir.
Thank you.
Thank you. The next question is from the line of Padmaja Ambekar from Parmeshwari Advisors. Please go ahead.
Thank you very much for the opportunity, sir. So what is the big achievement of our company? And what growth channels we are building?
Right. Okay. Have you completed the question? Should I go ahead? Okay. Right.
Yeah.
So if you look at in the last 2-3 years, in terms of our location, we have moved from 9 locations to 19 locations, where we are currently working on a day-to-day basis. Out of these 19 locations, 14 locations are working almost 24/7. In terms of our product portfolio, also has moved up from 6 to 9. In terms of our own distribution centers, it has moved from 2 to 6. In terms of our top clients, which were like 3 years back, we had 8 top clients. Now we have 30 top clients. In terms of presence across top 10 cities, we are present in the top 10 cities versus top 4 cities about 2 years back. In terms of our management bandwidth, we have more, senior managers and, department heads who are driving this business versus, having a promoter-driven business. In terms of processes, in terms of systems and, brand and all, we have achieved a lot of progress. We have also been working very aggressively with a lot of new channels like Horeca, as I mentioned, franchisee model I mentioned, even some of the technology initiatives we have been working on. So company has been able to spend a lot of time and energy and money on a lot of these new initiatives, which we believe that will start getting reflected in the growth in the coming 1 to 3 years.
Great.
Even if you look at our sales and profitability, sales has also grown at more than 27% CAGR over the last 3 years, 4 years. Our profits have also grown at almost 45% plus CAGR over the last 3-4 years. If you look at our capacity, the sales capacity, which was say around 20,000 ton 3 years back, 3.5 years back, which is at around 75,000 ton. In terms of our procurement bandwidth, which is around 50,000 ton, has almost moved to more than 150,000 tons. I think these are the couple of developments and the achievements which we believe have been laying a foundation for the next phase of growth for the company.
Great. Thank you very much. So who are our competitors? Can you throw some light on competitors?
Right. So as you all are aware that fruit vegetable market is definitely a lot fragmented, a lot run by unorganized entrepreneurs. It is also run by a lot of unskilled, semi-skilled, less educated people. So one is definitely we compete with a lot of local area aggregators and local area entrepreneurs in different cities. With respect to national players, like there is a company, Sahyadri Farms in Nashik, there is a WeGrow. There are a couple of agri startups who built in the last 4-5 years. However, most of these B2B agri startups have been finding it very difficult to create a scale in the game because they didn't have that back end and they could not invest in the creating a capacity. Also the experience of the area, the season, the product, the type of the team you have, all that matters a lot. So honestly speaking, going forward in B2B business, what we do, there's not much competition from any national player, any significant big national player. So we don't see that. However, there are local APMC players also and local trader supply chain partners also. And some of the players close to Mumbai and Pune, let's say some supplier or entrepreneur in Naranggaon or Nashik or Otur or Nagar or this kind of areas who definitely give us a tough competition in Pune and Mumbai. For us, the highest level of competition is Pune and Mumbai by most of the local area players. Otherwise, we don't see much competition from any national players.
Okay. This is very helpful, sir. Thank you so much.
Thank you. The next question is from the line of Ravindra Jain from NJ Securities. Please go ahead.
Yeah, hi, sir. I would like to know regarding the 29 crores preferential allotment which is being raised. So where is the company looking to use this process as in like how to deploy?
Sure. So if you refer through detailed documents and annual reports, and we have mentioned that we would be creating a better supply chain and upgrading some of the existing collection centers, distribution centers. We will also be kind of tying up with some of the existing cold storages, warehouses, pack houses. We would also be deploying some capital in the working capital for the exports. We will also be putting up money for the franchisee business, for the marketing, digital marketing activities. We are also trying to do automation and building certain technology for B2B business as well as B2C business. So broadly speaking, it is working capital, technology, marketing, some of the branding initiatives, some of the packing material inventories, and also investing in subsidiary companies or rather associate companies for growing our farming business and supply chain initiatives.
Sure, sir. Thank you.
Thank you. We have the next question from the line of Nipa Harya from Nipnil Investment. Please go ahead.
Good evening, sir. I would like to know what is the working capital cycle right now for this F&B business, foods and vegetables business?
Sure. So, of course, the cycle differs from segment to segment. We have about 6 to 8 segments of sales.
Okay.
On a broad basis, if you look at it, we could end up doing a sales between 3.5 to 5 times, depending on the season and in a year, like whether it is the first half or second half. Where second half you have better capacity utilization. So broadly, any incremental capital we should be easily able to deploy it to create a 3.5 to 4.5, 5 times type of sales impact with the capital. Of course, when you have been building business over the last 10, 15 years, you end up investing in farmers, advances, supplier advances, deposits, collection centers, distribution centers, etc. And hence, your ability to kind of get the sales multiple in the initial phase could be lower. However, now we are entering into a different phase of growth where we would be able to better utilize our capital. So that's how I would like to kind of summarize the question. Yeah.
Okay. So which segment, but right now, which segment the working capital is the shortest? You said 7, 8 segments in this.
So largely, we wanted to grow our export vertical in the last 2-3 years, and we realized that the export working capital cycle is longer and the deal size are also bigger. So that's where we needed a working capital. Also, when you want to build your B2C business or B2B technology platform, you need to invest upfront, and that's where also you need capital. And as we see that, when you start catering into more channels, you will need more collection centers, and you will also need to start storage of materials for long term and medium term. So, for example, onions or potatoes or grapes, etc., you can store also. So that's where also you will need working capital. If I want to aspire, we are kind of targeting that we want to sell at least 65 to 70,000 tons of materials in 3 years versus, let's say we are selling around 32,000 tons in FY24. Naturally, the working capital requirement will rise. And also, the prices of product have also gone up in the recent past. So that also requires more working capital.
Okay. Thanks a lot, sir.
Thank you. The next question comes from the line of Nihar Shah from Crown Capital. Please go ahead.
Hello, good evening, sir. 2 simple questions. I was just seeing through our financials. I thought that our H2 is better than H1 in last 2 to 3 years. So I just wanted to understand, is this the same trend going ahead? And what kind of percentage do we see, like 60/40 for H2? Like, can you state that?
Last two lines, can you repeat, please?
Yeah, I was just saying that we see that H2 is better than H1 in all the years, like not all, means like previous 2 to 3 years.
Right.
So is this the trend going ahead as well? And what kind of the ratio do we see? Like 40/60?
Sure. So, yeah, you are right. Actually, H2 is always better. The reason is you have the major harvesting season begins from mid-October, right? And secondly, you also have an opportunity to supply to exporters. So our experience says that you get more products in the H2 because typically, in April to September, you have 2 months of heavy rain. So that there where also you don't get much of a business. So it's purely one, a base effect. Secondly, you get more products in the H2. Generally, our experience is that over the years, we can easily target to grow 20% higher in H2 versus H1. And with this capitalizing, if we kind of start, if you look at the Q4 for us in the FY24, we'll have plenty of room to grow with this new capital coming in.
Okay, sir. And one small question on the EBITDA margins on console level.
Yeah.
Like we have seen that it's averaging around 7%, but in H1 we saw a drop to around 6.3. So is there a reason behind it? And can we get back to the 7% level by H2?
Okay. So one reason is that, we have been facing competition in some of the clients which are registered in one of the subsidiary, particularly Reliance and More Retail. Okay. So what we are supplying to Reliance Retail and More Retail is from Florence Farming Private Limited. Okay. We are facing a margin pressure because both the companies have been facing issues on the cost side and all. They want to cut their cost, etc. So naturally, because of that, we have seen the margin not doing well. Also, as I mentioned, we've been investing, right? So this investment phase may continue till maybe mid-April or something like that. So and then probably it will start tapering out. So we will have an improvement in consolidated EBITDA margin, as I mentioned earlier, maybe from H2 FY25.
Okay. So till then, can we see the margins around 6.5%? The EBITDA margin.
Yeah. So what we believe that this band of 6.4, 7.2 may continue for the next at least 3 quarters.
Okay. Thank you, sir, and all the best.
Thank you so much. Thank you very much.
Thank you. The next question is from the line of Priyadarshi Srivastava, an individual investor. Please go ahead.
Thank you, sir. Thank you for the opportunity again. Sir, I just wanted to know your presence and more details on the presence in the modern trade and what is the contribution in the total revenue, sir, from that modern trade?
Sure. So for us, we categorize it as a corporate business stroke, agri startup business stroke, service business with large corporates and brand sales, right? So this sales also includes sales of services to Reliance also and some of the FMCG and other companies. In FY24 H1, what results we have declared, the cumulative sales for both service and F&B from these large players was around 26-27 crore, which is around roughly 40% if you look at it. This was at about 14% in FY20, and this was at around 15-16% in FY21. So that's one of the biggest achievement, that our sales with Zapto, our sales with Swiggy, our sales with Big Basket, our sales with Reliance Premium, our sales with OTPI, our sales with Amazon, and of course our sales with couple of these large players is going up. We have also done very well on account of expansion in Mumbai in our service business, where now we are a backbone for Reliance Fresh Mumbai business. So we manage 2 major large warehouses one in Bhiwandi, the other is Taloja. These two warehouses on a daily basis handles close to 200 tons of fruit, vegetable, dairy, bakery products. And we have seen a tremendous growth versus last year. So I would say this number of 40-45% from this corporate sales, brand sales, modern trade, e-commerce sales will continue for at least another 1 year. However, since we have been investing in new channels and we have been intending to grow our APMC sales, franchisee sales, this may kind of fall as a percentage of sales because ultimately these buyers are growing at about 10, 15, 20%. And we have been growing at, let's say, 30%, 35% with them. So at some point of time, our growth with them would maybe about 20% type of growth. And our internal aspirations is 30-35% overall growth. So naturally, our growth will have to come from new channels, and not because last 3 years the large part of the growth has come from these large big clients.
Okay. So the margins are better in this modern trade or the direct APMC sales, sir?
So far, of course, the margins have been better in modern trade e-commerce, definitely.
Okay. Thank you again, sir.
Thank you. The next question is from the line of Amog Daiwadkar from Capital Square Financial Services Private Limited. Please go ahead.
Hello, sir. So what is the update on the franchisee model that we were constructing?
Sure. So over the last 15 months, we have been working on building this model. We have been doing a lot of R&D, road shows, participating in conference, seminars, etc. We have done road shows and meetings with potential investors and participating in fair at Ahmedabad, Mumbai and Delhi and Pune. We intend to start with 3 cities initially, Ahmedabad, Mumbai and Pune. We have met with about 185 plus people in the last 12 months. And we have been trying to recruit a right manager and right team. We have also designed a model. We have finalized the layout of the store. We have also finalized the model of revenue model and the profit sharing and margin model for our partners. We think that somewhere in the next 3-4 months, we should be able to start rolling out the franchising model. Our idea earlier was to launch roll out the model before end of March 2024. We think that we should have 5 outlets each in all these 3 cities, and maybe company own 2 outlets each in these cities. So our internal aspirations is to have about 18 outlets in place by maybe mid-April or end of April 2024. So that's the update on franchising model.
Okay, sir. And just one more small question, sir. Where are we in terms of the farming and the export business?
Right. So again, we need to build a better and bigger management bandwidth for each vertical. So right now, in terms of exports, we have been building separate team for the back end, and promoter themselves have been meeting some of the buyers. I think another 2-3 months will go into building a right process where you can have a sustainable exports. Because what happened in the previous phases of our export initiative is that if you cannot have a dedicated managers and dedicated leaders for each vertical, the promoters' energy and time tend to get spread thin onto too many things. And hence, consciously, we decided not to focus on exports in the previous 3 years. Now we have created a proper model, the ecosystem, and we believe that somewhere mid-January onwards, we will make a beginning of our export business. The second question, what you said, export and?
So that's it. That was my question.
Right. Thank you. Thanks.
Thank you so much.
Farming you said, sorry. Yeah. Right. So with regard to farming, of course, we have been visiting lands. We have been getting strong interest from a lot of big landowners in Kutch, Rajasthan, Maharashtra. We have created a two-member team to evaluate the opportunities. We are creating documents within the system and how we will roll out this model, which are the crops we will get into, which are the districts we will work with, what will be the productivity of the capital. And again, the blueprint should be ready internally, maybe in the next 2-3 months. And we intend to become kind of aggressively, getting into this phase, space post mid-February, mid-March, because we were waiting for this preference LTD also to get over, because you need a good, decent, financial muscle power before you get into any such business.
Thank you.
Thank you.
The next question is from the line of Nihar Shah from Crown Capital. Please go ahead.
Yeah. Hello, sir. Thank you for taking my question again. I heard that you to the previous question that you are...
Sorry to interrupt, but the line for you is not very clear. I request you to please use the handset mode and move into an area with a better network.
Yeah. Hello.
Sir, you're not clear right now, sir.
Hello.
Yes, please.
Hello. Heard you telling to the previous participant that we are aspiring for internal growth of around 30 to 35%. So, did I hear it right? So, going down, say, 3 to 5 years, we are seeing a CAGR of 30 to 35% for our company?
Sure. So, our internal aspiration definitely is to grow our tonnage business at 30-35%, right? Because we have already created a capacity. So, if you look at the current sales in terms of tonnage for FY23 and where we were in H1, so definitely there is a huge scope to utilize our capacities. And hence, with this working capital available now, and maybe 1 or 2 senior members coming on the board, we should be able to grow at this pace over the next 3 years.
Okay. All the best, sir. Thank you.
Thank you. Participants who wish to ask questions may please press star and 1. To ask a question, ladies and gentlemen, you may press star and 1. Participants who wish to ask questions may please press star and 1 at this time. We have no further questions. I would now like to hand the conference over to Amog Daivatkar for closing comments. Over to you, sir.
Thank you everyone for joining the call on behalf of Fresh Ltd and Capital Square Financial Services. Have a good evening.
Thank you everyone. Thank you very much.
Thank you.
Thank you. Thank you all for joining us. You may now disconnect your lines.